At Ground Truth, we take a money-making strategy somebody online is selling you and test whether it actually works, for real, on decades of real data. Today, it's the single most taught day trade on the internet. You've seen this video 100 times. Draw a box around the first 15 minutes, wait for the price to break out and come back, and you supposedly can't lose. So we ran that trade 244,000 times, enough that no lucky streak could ever fake an edge that wasn't really there. 244,328 trades. We counted every one. And here's the part I didn't expect. There's something real in here, a genuine edge worth about 3 cents on every dollar you put at risk. The trouble is, what it costs to go collect it. By the time you've paid to collect that 3 cents, it's a 21-cent loss. Same trade. Every single time. So, 3 questions, and keep them. 1. Is there anything real here, or is it just noise? 2. If it's real, is it big enough to survive what trading it costs? 3. Does the famous retest, the part everyone teaches, actually do anything? Answer those 3, and you've answered the only one that matters to you. Should you trade this, or pay for the course that sells it? This is Ground Truth. Quick note. This is education and entertainment, not advice. We test ideas. We don't tell you what to do with your money. Here's what happened. Start with the pitch, at full volume. The strongest version of an idea is the only one worth testing. The market tips its hand in the first 15 minutes. You draw a box around it. Price breaks out, boom. But you don't chase. You wait for the retest, you let it come back and tap the line, and that's your entry. Tight stop, big target. 80% of the time, you win. Slow down, because this only works if you can actually see the trade. When the market opens, prices jump around for a while. Take the first 15 minutes and draw a box, the high and the low of that opening range. That box is the whole idea. And the second it breaks out of that box, that's the market showing its hand. That's go time. Right. If price closes above the top of the box, that's a breakout, and the theory is the day has picked a direction. Now the famous part, instead of buying that breakout, you wait. You let price drift back down and tap the top of the box one more time, the retest, and you buy there, betting it launches again. Your safety net, your stop, sits at the bottom of the box, so if price falls back through it, you're out for a small loss, and your target is a fixed distance away. Box, breakout, retest, stop, target. That's the mechanical core of the strategy the whole internet is selling. And the pitch is convincing for a good reason. It's built on something true. A market that's genuinely committed to a direction does tend to keep going for a bit. So the real question was, never, is the idea crazy? It isn't. It's the question the pitch never runs, the one the thumbnail never shows you. Once you add up what it actually costs to place all these trades, does anything survive? So we ran it the way a trading desk would, not the way a thumbnail does. Real 1-minute prices, 22 years of them, on the most heavily traded stocks in America, and on data that still remembers the losers. Most people test on today's list of winning companies, which is like grading a class after you've expelled everyone who failed. Ours keeps the dead ones in. We picked which stocks to trade using only yesterday's information, so the machine could never use tomorrow's, and we wrote the pass mark down before we pulled a single price. Then we turned the machine on, and the first thing it did surprised me. Test 1, turn the costs off completely. A fantasy world where trading is free, just to see if there's any signal in here at all. And there it is. Across all 244,000 trades, with costs switched off, the strategy makes money. Barely. About 3 cents for every dollar it put at risk, and by at risk, I mean the money you'd lose if the trade hit that stop. It wins about half its trades. That is a real faint pulse. So, write down the honest answer to question 1. Yes, there is something real here. The people trading this aren't imagining the pattern, which is exactly why the next number is the whole story. Test 2. Put the real cost back on, because in the real world, trading is not free. Every time you buy and sell, you pay a toll. The tiny gap between the price to buy and the price to sell, plus the little bit you lose just getting your order to actually go through. On these giant stocks, that gap is about a nickel for every $100 of stock you trade. Now here's the trap, and it's the whole reason this fails. Your stop is tight, you're only risking about $1 to make about $1. But to place that bet, you're buying around $100 of stock. So a nickel on that 100 isn't a nickel against your bet. It lands as a nickel against the single dollar you're actually risking. And a nickel is already about the most a 3-cent edge can survive. Even at the rock bottom spread, you're at a wash. And a nickel is just the spread. A real person also eats slippage and misses the exact retest price. Price it all in, call it 20 cents on the 100, which is the honest, all-in cost we locked in before the run, and that 3-cent edge becomes a 21-cent loss on every dollar you risk. The edge was real. It was just smaller than the toll to collect it. And to be sure that pulse wasn't luck, we ran a coin flip version, same stops, same targets, but entering at random moments instead of on the signal. At that same honest cost, the signal loses 21 cents. Pure chance loses 40. So, the signal is genuinely doing something. There's real structure. It's just an order of magnitude too small to survive the toll. So, answer to question 2, no, it's real, and it isn't big enough. It isn't close. Now, before we call it, let me try to save it. 4 ways. Okay, but that's just one bad decade, right? Every strategy has a rough patch. We split all 22 years in half. Both halves lost. Maybe a handful of ugly days dragged it down. We deleted its 5 worst days entirely, basically no change. Maybe the target was set wrong? We tried it 3 ways, small, medium, and large. All 3 lost the same. And then every single year it traded, 2004 through 2026, not one came out ahead. Not the crash of 2008, not the boom of 2021, there was nowhere to hide. Test 3, the famous part. The retest, the wait for it to come back and tap the line step the whole pitch is built around. That has to be the magic. So we ran the trade both ways, once waiting for the retest, and once just buying the plain breakout, no waiting at all. They finished in a tie. If anything, waiting for the retest did slightly worse. The one step the whole strategy is named after, the thing that makes it feel like a secret, adds nothing. So, answer to question 3, no. The retest is theater. It feels like skill, and it changes nothing. Remember the 3 questions. Is there anything real here, or is it just noise? If it's real, is it big enough to survive what trading it costs, and does the famous retest actually do anything? Here's the single number that answers the first 2, and you already watched it answer the third. This is the whole trade in one number. Start with trading free, it earns its 3 cents. Then add cost, a little at a time. And the number drops below 0 and never climbs back. The strategy doesn't have a targeting problem or a discipline problem, it has an arithmetic problem. The edge is real, and the edge is too small, and those 2 facts live in the same picture. And that 80% win rate the ad brags about, we never even saw it. Our version won about 51% of the time, a coin flip, and that gap is the whole trick. You can crank a win rate as high as you like, just take your profit early and set your stop far away. You'll win small, over and over, and then hand it all back the one time that far stop finally hits. A strategy can win 80% of the time and still lose money. The win rate was never the edge, it was the disguise. We wrote the pass mark down before we ran anything. To pass, the strategy had to make money after real costs, and we had to be statistically sure it wasn't a fluke. It didn't just miss. We re-ran the math thousands of ways to ask how wrong we could be, and every single version still lost. The best case was still a 20-cent loss on the dollar. That part is measured, it's not close. And then the quietest number in the whole study. Over these same 22 years, a person who bought a plain index fund and did absolutely nothing made about 9% a year, and that's on price alone, more with dividends. The strategy that traded every single morning, that you'd wake up for and stare at charts for and pay tolls for, lost money in every one of those years. It didn't just fail its own test, it lost to a person who wasn't even trying. So why does it spread? That part we have to reason out, but it isn't a lie, and that's what makes it durable. There really is a faint pattern, so an honest person can watch it work for a morning and believe. The high win rate feels like proof, and the losing traders don't post. The person who paid the toll 200 times and quietly bled out doesn't make a video about it. So the internet only ever sees the winners, and the pattern looks stronger than it is. And to be fair to the traders who teach this, the pattern they see is real. Survivorship bias fools the person selling it too. You can watch your own winning mornings and never tally the toll. So carry one question out the door for the next strategy video too. Is the edge they're showing you bigger than the cost of trading it? Because a real edge that's smaller than its own toll isn't an edge, it's a bill. So, should you trade the opening range breakout or pay for the course that sells it? Across 244,000 trades, 22 years, real costs, the pass mark set first, no. Not because the pattern is fake, it isn't, but because the real thing it found is smaller than the price of collecting it. The retest is a ritual, the win rate is a disguise, and a nickel, charged often enough, is the whole story. And what would change our mind? We're not looking for a better exit or a bigger target. We already know those don't help. It would take a genuinely new way of choosing which breakouts to take, a filter that makes the raw edge bigger before costs, big enough to clear the toll. There's a cheap way to check one before betting a dime, and we'll run it through the same machine. The day a version of this clears the toll, honestly, you'll hear it here first. This is ground truth. We take the promise your feed sells the hardest, and we test it the way a trading desk would. Real prices, real costs, the pass mark written down before the data. And we show the work, because a verdict you can't check is just another opinion. That strategy on your feed right now, with the box and the breakout and the 80% win rate? Now you know what to ask it.